$25,000 question. What will the market do next? Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of January 18, 2018. And I say $25,000 question. Of course, I'm looking at the Dow Industrials and put in a very big benchmark above $25,000 late last week. Just a huge, impressive rally all through 17. And if you look at the weekly chart, going back, of course, to the beginning of this overall rally back in 2009, recovering from the financial crisis back then, over triple from the low starting in 2009, and again crossing this incredible barrier of 25,000. So what's it going to do next? Well, opinions are all over the map. If you go Google market, maybe next market forecast, you're going to get such a divergence of opinions. I call it noise. It really is noise. It's really interesting to read, but I don't think any of the analysts or any of the talking heads are really giving us any information useful to trade on. And if you've been listening to me for any period of time, you know I prefer to trade the reality of the markets. I love reading articles. I'm a news junkie and looking at analysts and analysis, but I'm going to trade the realities of the market. And the realities here on the Dow are it continues to put in higher highs, higher lows, higher highs, higher lows. It's in a classic uptrend according to Dow theory, putting in all kinds of new highs. No sign of a correction yet. Will it correct someday? History tells us it will. But the good news is we will have some heads up. We can't call the exact top, but when it does turn, there are clear technical signs that it has done that. We'll be able to participate in the downtrend. Meanwhile, we participate in the uptrend. It's like being on a sailboat, man. Go with the wind, go with the current. There are other sectors where there's some good short trading opportunities, but most of the market, as evidenced by the Dow and of course the S&P 500, I'll pull that chart up, looks pretty much the same. S&P 500, hard to distinguish them. Putting in new record highs, uptrend continuing, bull market continuing, and that is the reality. Now we've got some things coming up that could be disruptive that we will definitely want to pay attention to. Again, we're not going to trade based on these, but we're going to watch what the market reaction is, the reality, and if the reality plays out of a market turning down, then we're going to trade according to that. We've got earnings kicking off, earnings season. Alcoa, typically considered the major big company, reporting first, kicking off the earnings season, coming out on the 17th. So got about 10 calendar days until that. And then on the 19th, this is really the big deal. If you go to Google News and search on markets, all the headlines, and I think I can bring that up here, all the headlines are going to be about President Trump and Congress and the government shutdown. The current deadline is January 19th that Congress has to come up with a spending bill and all that kind of stuff to avoid a government shutdown. And you can bet that's going to be contentious. There's going to be all kinds of information, lots of noise about the budget and spending caps and shutting down the government. The vitriol and all that stuff is going to reach a fevered pitch, and we'll have to see how the market responds to that. So some key dates coming up: 17th for earnings kickoff, 19th for the deadline for government, Congress and the administration coming to terms on a budget and the government shutdown and all that stuff. Regular economic news doesn't seem to matter that much right now. The big report, the jobs report, came out on Friday, January 5th. It was a weak jobs report, and you can see the market could care less. It continued on putting in these record new highs. So boy, it'll be interesting. The key thing in this market, in any market conditions, right? Because there's always something looming on the future that could be disruptive. I've been trading a long time, and I can't remember a period where there wasn't some big deal coming, a fiscal cliff, threat of war, government shutdowns, you name it, right? There's always something looming that could be disruptive. So the only way we can deal with that is to have a solid trading plan, to have good risk control, to control loss on individual trades. So if things do go against us, it's a tolerable, controlled loss. And meanwhile, we participate in the overall market direction or sector direction using a disciplined trading plan. Let's go ahead and take a look at some of the key other things. I've added, so many people are asking about and interested in cryptocurrency, Bitcoin, and of course futures are now trading for Bitcoin. I'm looking at the CME futures here, the continuous contract on TradeStation. So since it launched, big pullback and a recovery. And what that looks like, just based on Elliott wave analysis here and projecting the data in front of us. This doesn't include the huge rally that got things up to 20,000, so it could be a little bit of a distortion. But once it launched onto kind of broader markets, pretty big pullback from 20,000 down to about 12.5, and now a retracement up into a Fibonacci retracement zone. So if we see it reverse from here, we could see another impulsive move down. It's too soon to call this, so this is speculative. Speaking of cryptocurrencies, speculative is a good word. But if it reverses from here and continues down, it could be going down below 12. So that'll be interesting to watch. We'll need a few more price bars before we can call that, but I thought it'd be fun to include it in the analysis. So many people ask about it. Let's go ahead and take a look at gold. So gold is something pretty interesting going on here. And you can see on a really, really big picture, kind of a macro analysis, let's look at gold. Starting in 2017, big move up, big move down, starting a big move up that could go on to new highs. Now it doesn't go straight. You look here, there's right? So we could see that we've had a big impulsive move, so it wouldn't be surprising to get a pullback. And I'm watching really closely the 200 moving average. It's this white line here, and the Ichimoku cloud. So we could pull back even to somewhere in here and then continue and still be in a bull trend on gold. After this big move here, it would be rare for it to continue without some kind of pullback before continuing. So that's what to watch for on gold. And now let's take a look at oil before we go ahead and wrap it up. And so here's oil on the daily chart. Now oil is inching its way up, and it's at new highs for a multi-year period here. It's volatile, but it's higher highs, higher lows, higher highs, higher lows, just marching up in a classic uptrend. Let's switch to a weekly chart here real quick, and you can see we're at a high, and the last time it was at this price was in 2015. So it channeled for quite a ways, and now it's breaking out. And the retracement zone, where when it came down, the big drop in oil in 14, 15, retracement to that would take us into about to 85. So again, it's volatile, and let's see where it goes from here. But we're in a nice strong uptrend, and we do have higher highs, higher lows, higher highs on a daily basis, even on a weekly basis. Expect some volatility and pullback. But the fact that it's putting in new highs tells us that we got a rally here. It looks like a corrective rally. And again, the midpoint, just from a technical basis, about 85. About 85 on this rally. It's got the 200 SMA. It could hit and fail. We'll have to keep watching that. But that's what it looks like right now. Well, that's it. As always, never a dull moment. If you have questions or comments, I'd love to hear it. Just shoot a comment back. And otherwise, we'll catch you on the next update. All right, thanks. Be safe. Trade carefully. Use risk control. Keep the winners big, the losers small. Thanks. Bye.